Meanwhile, the U.S. tech industry is facing a turbulent period, with leading firms such as Amazon, Alphabet, and Meta cutting staff. These companies boomed during the COVID-19 pandemic, boosted by low interest rates. But recent earnings reports have done little to spur investor confidence. Sally Patterson has more from New York.
Earnings season on Wall Street, an opportunity for big tech to prove to investors that they're back on track after a turbulent year. Meta, which owns Facebook and Instagram, has posted its third straight quarter of declining sales, but it says it expects this year's expenses to be less than previously forecast, prompting a sharp jump in its share price. It's one of several tech giants trying to boost efficiency by culling staff.
What I was able to hear from many friends, I was at Google for over 8 years, was they woke up on Friday morning or middle of the night, they were still up and realized that their access to the Google Corp accounts were disabled. So they weren't sure exactly what was happening. Some of them was able to check their personal emails and realize their employment was terminated. Again, that was probably the biggest shocking news to themselves.
During the COVID-19 pandemic, some of the sector's biggest players, Google, Meta, and Amazon, boomed, doubling their workforces in just a few years.
Fueling that growth was the fact that interest rates were so low in the United States. And so it wasn't just the big tech companies. There was a whole host of startups, smaller companies growing big very fast because they were able to raise a lot more capital than they otherwise would have. And they went on hiring sprees as well, further sort of fueling this hiring boom. And so one part of it is just an adjustment for that.
But as the world opened up, demand fell back down. Soaring inflation and high interest rates fueled economic uncertainty and fears of a recession, seeing tech's revenues plummet. Here at the New York Stock Exchange, there's optimism that efforts to slim down and regain market confidence are working, and that big tech shares might be able to claw back at least some of the trillions of dollars of value lost in 2022. Market watchers say artificial intelligence and machine learning are the next drivers of the industry.
I mean, you can't go a day without coming across some important new development, news article, commentary about this area. And it's because people see it as the next wave and potentially, changing the world. And so that's really what technology has to offer. And so I think that's one of the reasons why counting it out at this point could very well be premature, because we've seen time and time again, at least over the course of my career, like doing that is something that people do only at their own peril.
Big Tech's challenge for 2023 will be finding ways to slide out of the red into the green. Sally Patterson, CNA, New York.